We've just had some really bad news in crypto today. Our top-ranking altcoin has called it quits and shut down operations entirely after claiming bad market conditions. It seems that fear is only getting worse in crypto, with the charts and headlines continuously being negative and rolling in. So that's why today, whilst I'm still very much bullish, I do want to talk about some of the possible reasons why this may not be the last altcoin we see collapse before things start to get better. But the idea for this video is to help you with your research, with your conviction in the altcoins that you may own, with diversification, and to ultimately help you spot the quality coins amongst the sea of chaos that is happening in crypto. And as a matter of fact, at the very end, I do want to share some really good news. So what's happened? Well, a coin called Kadena, ranked roughly 300, so I would consider this a top-ranking coin, went from around 120 million market cap and essentially evaporated based on this news from the team. The team saying that they're no longer going to be continuing to support and build Kadena due to, importantly, market conditions. Now, this is giving me a sign that they haven't stopped the project because it's all of a sudden become too much work. They've stopped because the market hasn't been the same as it was in previous cycles. And so this is why I'm saying we could have a potential systemic issue here, and why I want to go into this in this video. It's not to scare you guys. It's to get you thinking. It's to get you prepared. Now, based on this news, we saw a massive 61% drop. Actually, it's even more now, in Kadena's price in a matter of a few hours. But look, Kadena, this project was around in the previous cycle. This is a project that, in my firm belief, on the surface level, still looked quite strong and healthy. Looking at the Twitter account, okay, you can see as a few days ago, these guys were at ETH Global Hackathon with their own booth, people building projects on there, all right, very active on the socials. So this is a really interesting thing, because obviously basic research, even into the events or the roadmap page you can see here, does show they were still expecting to be at Blockchain Africa and another event in November. Not to mention, they're in really good narratives as well. So what's actually gone wrong here? Now, here's the scary part, guys, because this could happen to any project. From what it seems like, there are projects that are running dry right now with capital due to market conditions. Let me explain more. First of all, we have a lot of layer one projects. Kadena is a layer one project. It's built architecturally in a really cool way. It's proof of work, scalable. Honestly, it is actually a fantastic technological project. But again, it just didn't get any major adoption. If you're buying a coin like Psy, like Injective, like Cardano, like Solana, BNB, Hedera HBAR, Algorand, Nida, go on. When you're buying these sort of layer one coins, you've got to look at its competitors. You've got to look at what actually makes them tick. Now, some of these things include revenue, daily active users, institutional partners, TVL, strong narratives. What I'm saying here is diving into things like this, which is the TVL, total value locked in Kadena's ecosystem, you can start to see some cracks begin to show through. First of all, they have an appalling amount of projects built on the network. They had 7, 8 if we're including near intents, which I wouldn't actually do. And if we have a look before this crash, they had around $500,000 to $700,000 in total value locked. Now, that's not much. I couldn't find any data on this, but I'm pretty certain that they're not going to have very many daily active users. I'm pretty sure this metric would be in a decline. Not to mention, it's a proof of work project, which means there is a high barrier to entry if you want to run a node on the network or run as a miner on the network. And so these machines are going as high as 11, 12,000 US dollars each. And so essentially you have a very difficult platform functionality here. You don't have very many miners on the network. You don't have very many developers building on a project. And eventually what happens is you have no utility for end users. That means no revenue. No revenue means you can't actually fund your project, because revenue comes from fees, no usage, no fees. So this is where I begin to see some cracks running through. And a lot of these projects can sustain themselves for quite a long time because they have pretty large funding, right? This is a very nascent but exciting area of the technology world, kind of like the dot-com bubble, right? So a lot of investing comes through, a lot of stupidly crazy amounts of money comes through. And so $15 million was raised for Kadena back in 2017 and 2018. The issue is that was a long time ago. All right. I'm guaranteeing you now these guys would have burned a lot of capital in the previous bull market. And because, as in their own words, due to market conditions, this cycle kind of prolonging, they've likely burnt through capital along this time, not able to pay their developers, not able to pay their own team members, and therefore it's dwindled down. You essentially have a reverse flywheel. You can't build any new applications because you can't actually pay for even third-party developers. And if the third parties aren't there, the miners aren't getting any revenue from mining, right? So they're not going to be, essentially running the network any further. And therefore, there's no more capital going to come through from investors because the platform is not worth much. And it's this inverse negative spiral downwards. Now, I've used GPT here to help me with finding projects from 2015 to 2018 that launched, had some funding, and if these are one of your projects, it's definitely worth you going into your research, like with Crunchbase here, and having a look at how much funding there was. If there was no funding, okay, or very little funding, like with the example of Aave, so Aave only had around $16 million of funding, kind of like Kadena back then, all right, but is Aave generating revenue these days? And in fact, it is because it's being used. So let me just make this clear. If your project was around years ago and it had little to no funding, okay, and the project isn't generating any revenue, then this is a real situation you must consider. Guys, teams are getting desperate, all right, because the cycle has progressed from the halving to where we are right now in an unusual way. It hasn't done the usual up only from the halving like you can see here with the total 3 ES. And so, cutting losses might be the only way teams can sort of get themselves out of an issue here. They might be running dry. And again, it's not to scare you, but with the unknown of going up or going down here, these projects are just businesses, people running companies that run the project or foundations that run the project. And so ultimately, if the future is unknown, they've got to cut their losses. This facade of decentralization sounds great, but it really is just that. It's a facade right now. Not many projects, if any, are actually decentralized. Some more examples of either shadiness or projects running dry with capital is Ocean Protocol. To save you the story of how this all happened, essentially Ocean Protocol had a very abrupt ending to the alliance they joined with Fetch, Singularity, and Kudos. And it all started when they decided to essentially take their Ocean tokens, they never really moved into the new alliance token, FET token, and they finally did that randomly after over a year, and then tried to send it to Binance and these guys called GSR, which is an OTC desk, to sell, likely. It's very suspicious to say the least. And so it could be in an attempt to get liquidity. Maybe Ocean had no more money to spend, and the founders thought the only way we can do this is by maybe being malicious or maybe framing this in a way for us to keep operations running. I don't know. Moral of the story simply being there's liquidity issues. Otherwise, they wouldn't have the incentive to want to do this and ruin themselves right before a potential bull run. So we might actually start to see more of this, more of the older projects with little funding from previous cycles that ran themselves dry and haven't really moved all that much in this bull run. They might start to pop up and have these liquidity issues. I'm not saying it's guaranteed, but this is something I think worthwhile you knowing. And all this is to say, as the bull run actually picks up and these projects start generating more revenue, then yeah, there is hope that this actually doesn't really become much of an issue. But right now, we don't know how long we'll chop. This is why if you want to look at buying a coin, make sure it's gaining adoption, not losing adoption, because adoption usually does mean revenue. Otherwise, make sure the project, for example, has a certain amount of tokens in the distribution that they're able to at least dump on us. Now, I know that sounds crude and ridiculous. Karen, why would you say such things? Well, Ripple does exactly this. They have 1 billion tokens that unlocks every month, and they can choose to spend some or all of that 1 billion tokens by dumping that on the open markets or via an OTC desk that won't impact the market price. And what that means is they're able to get themselves some capital for funding to run the business. Now, do I think this is okay? Do I think this is moral? Absolutely not. It is the standard operations in crypto, unfortunately. At least Ripple does this publicly and transparently. So what I'm saying is if they're not generating revenue, ensure they have some of the token supply in their hands that they can sell if need be to fund operations. Otherwise, from what it looks like, again, I'm not sort of saying that this is something I've had a great theory on for years now, but by the looks of it, revenue money is running dry because projects just anticipated us to be pumping right now. But be very careful, my friend, of what's called the sunken cost fallacy. It's a phenomenon where a person is reluctant to abandon a strategy or course of action because they have invested heavily in it, even when it is clear that abandonment would be more beneficial. A great example is casinos. You go to the casino, you start spending $1,000, for example, and you don't want to lose that, but you're down $800, $200 left to your name. What's the train of thought for most people? I'd rather try and make it all back and lose the $200 because I'm down so much, rather than walk out and know I've lost $800 without giving it my all. That, unfortunately, is very common in crypto, and you end up holding coins like Terra Luna, for example, where there's just no possible way of it ever coming back. So what to do in this situation? Well, this is Kadena's chart. And again, I'm not a financial advisor, by the way. Full disclaimer, this is all just complete theory. But here is something that I want you all to think about when it comes to these situations. Okay, if you've had $10,000 in Kadena here, and it's now dropped and you have $2,500 left after the 76% drop, you've got to remember, okay, Kadena is in the same position as any other coin right now where you only have $2,500. And what I mean by this is, in order for Kadena to go back up to your $10,000, it's not a 70% increase. What has to happen here is roughly a 300% increase, or roughly a 4x. So you have to 4x your bag to get back to break even. Now, why is this interesting? Because many people think, due to the sunken cost fallacy as well, that Kadena is somehow going to find an easier job of making that happen. So they let their $2,500 sit in Kadena for the possible hopes it does this, rather than saying to themselves, well, actually, no matter if I go ahead and buy Injective, for example, just an example, and put the $2,500 here, okay, maybe Injective has more of a chance of going up a 4x than Kadena. And in a lot of cases, you know, Injective, I think, being a very strong coin here, that might be the case, all right? So what I'm saying is that sometimes materializing a loss, getting out of a coin that has absolutely no chance of making a comeback, or at least very, very little, I'm not saying it's over for Kadena entirely, but theoretically, and moving into a coin with so much more fundamentals, revenues going up, daily active users are going up, TVLs going up, and you have conviction in this project, that makes sense. If you don't believe me, plug it into GPT and run this exact example through. They are more than likely going to tell you it makes sense to make the switch. But I must say, I must stress this. Please don't do this if you still have conviction in the coin. The last thing you want to do is materialize a loss, buy another coin, for example, and you think to yourself, wow, I don't know much about this new coin, or I still like Kadena. You can run yourself into a lot of problems very quickly. I've done it myself in the past as a beginner. So look, all in all, whether your coin is down severely like Kadena and you have no more belief it will go up, or if you are just looking to buy, right, one of the stronger coins in the market to ensure it doesn't have these liquidity or funding issues, then there is, again, an approach you want to follow, all right? And I've been speaking about this for a long time now, and I stand by it still. I've got a free, 1.5 hour course on YouTube that goes through all of this, and like I said before, it's not something an everyday beginner can just pick up and start doing. It's going to take you a little bit of practice and time, but I really urge you just to do this for every single one of your altcoins right now, especially the ones that are older, lacking the revenue, lacking the funding. They could be running dry, and it's not to scare you. It's just to, again, push you in the right direction. So it's basically looking at all of those things I mentioned earlier and making sure they're going up, not going down. Now, you can definitely see the price of some of these coins going down, while the internal metrics, like the revenue, like the active users, like the new wallets being created, like the TVL, like the core developers, all of these things, new projects, you can see these actually going up while the price is going down. And just like Jeff Bezos said about Amazon, when the dot-com bubble, busted, internal metrics were going up whilst the price went from $100 to $6. and obviously it had a great recovery and continued going much, much higher. This could happen. It's crypto. Things move very, very quickly. So be mindful of that. People look at price. Price is a reflection of the current sentiment, and usually current sentiment of an altcoin is dictated by the actual general market, by Bitcoin even, not the individual altcoin. But if you want to quickly have a look at whether a coin's doing really well right now or not, a good way to do this is by having a look at market dominance. Now, to cut a long story short, market dominance as a percentage is your coin's strength in the market. So in dips, if your coin's actually going up in market dominance, it's getting more strength, that means that actually people are choosing to buy your coin more than others. So this is a really healthy sign. You don't want to sell your whole portfolio every dip we have and buy the strongest coins in that dip, but this is a way we can identify whether your coin is doing well or not, and if it's not your coin, which other coins that you're eyeing off could potentially be getting stronger in this market. I'll also go ahead and say, following my Pumpermentals plan, right, narrative through to team, tokenomics, and so on, this is important. This is what I was saying before. I have a 1.5 hour course free on YouTube that explains all of this. But I think most importantly, just make sure that in crypto, you're not just looking at buying any random coin in this sea of madness. You're looking at first the narratives, the biggest areas of interest. And then within the more popular areas, narratives, you're finding the coins that aren't just the biggest market cap projects, mind you. You're not trying to find the ones that are already there if you don't want to. Just find the ones that have the internal metrics, like I mentioned before, going up. The beautiful thing is we do have some possible institutional interest coming through. This is that sort of light at the end of the tunnel I was mentioning earlier on. A lot of these coins have ETFs launching, hopefully within the next few months here. A lot of these projects are actually going to be finding their ways as ETFs into indexes. Okay, so as Nate says here, a lot of the TradFi guys will likely want to buy indexes to prevent things like this happening to a coin they might want to buy as an ETF. And so what does that mean? That means we're going to have, Bitwise, for example, which recently had their 10 token ETF approved with the likes of ETH, XRP, so on and so on. Like these will come through and will likely have institutions and large accredited investors buying these instead, like the Coinbase 50 index, like all of the S&P global indexes as well. Grayscale's got a few decentralized funds. These will begin popping up, and the coins in these areas will just generally begin to grow from institutional demand. So this might be a really good idea for you guys to begin researching as well. So look, I hope you have enjoyed this video. If this sort of thing is what you can enjoy, I mean, I do feel, again, really, really deeply sorry for every Kadena holder right now. It's not a good position to be in. And I'm not, again, giving you financial advice by saying, hey, consider these options. What I am doing is exactly that. Just saying, have you thought about this? Just be careful because you can lose yourself in the sort of jumping from coin to coin situation. Thank you so much. I'll talk to you guys soon.